Good morning, traders. It's Monday, May the 5th, and here's what you need to know as we kick off the week. Let's start with oil. Brent crude is trading just above $58, its lowest in 4 years, after OPEC agreed over the weekend to accelerate output hikes. The group will add another 411,000 barrels per day in June, bringing the rollback of prior cuts to nearly half. This is a direct response to some members, like Iraq and Kazakhstan, exceeding their quotas and pressure from the US to keep prices low. The market is now facing a potential surplus, and Barclays just revised its Brent forecast down to $66 for this year. If you're trading oil, think about increasing your short exposure or hedging long positions. Watch for compliance slippage within OPEC. If discipline breaks down, we could see even more supply and further downside. On the geopolitical front, tensions in the Middle East remain high. Israel is threatening retaliation after a Houthi missile backed by Iran landed near its main airport. Iran's defense minister has warned of a response if the US or Israel strikes. This risk premium is being offset by the supply glut, so if you're trading energy, stay nimble. Consider short-term volatility plays or options strategies to capture sudden price swings. Moving to metals, gold is up as the dollar weakens and traders await the Fed's rate decision this week. President Trump reiterated his call for rate cuts and confirmed Jerome Powell will stay on as Fed chair. If you're trading gold, think of scaling into positions ahead of the Fed. Lower rates and ongoing trade uncertainty could support further upside. Silver is also firming, but platinum and palladium are soft. For industrial metals, the ongoing US-China tariff standoff is weighing on demand, especially with Chinese markets closed for the Labor holiday until Tuesday. Agricultural commodities are mixed. Sugar is down, cocoa is up nearly 2%, and canola is slightly lower. US-China trade tensions continue to pressure US agricultural exports. So if you're trading grains or softs, keep an eye on tariff headlines and Chinese market reopenings. Consider reducing exposure or using spreads to manage volatility. Finally, on the macro side, US stock futures are slipping after a record run as Wall Street waits for the Fed and new manufacturing data. If you're trading cross-asset, be cautious. Momentum is fading and volatility could spike if the Fed surprises or if trade talks stall. That's your Monday market rundown. Stay tuned for next week. Stay sharp, trade smart, and remember, in today's environment, flexibility is your best edge.